I signed up for my first high-yield savings account 6 years ago and opened several others since. So here's 7 important things you need to know before opening one, like taxes, fine print, what to look for, the truth about interest rates, and my top 6 accounts. That way, you're prepared to open one without any nasty surprises. The first thing you have to know is high-yield savings accounts are not for long-term investment. Here's why. The yearly interest earned, or annual percentage yield, is variable, meaning it can change at any time. So what it is today might not be what it is in a year or even in a few months. And it can be as low as 0.5%, so you can't rely on consistent interest and growth for the long term. Why do interest rates change? APYs on high-yield savings accounts mainly depend on big picture economic factors, like the federal funds rate and a bank's own strategy. If a bank wants to attract deposits quickly, it might boost rates temporarily or run promotions. External factors like inflation and market uncertainty also play a role in how much interest you earn. I'm here to help you understand the fine print on these accounts that took me years to figure out. So when you're looking at their website, you'll likely see fine print that says the APY is variable and subject to change at any time without notice based on market conditions or the discretion of the bank. I'll cover a ton of other very important fine print later in this video, but now here's a mistake I personally made with my first high-yield account. A high-yield savings account is not for spending. It's for saving. If you withdraw from it like a checking account, you're basically canceling out the interest benefits. Remember, the more money you have in your account, the more interest you could accrue. The longer your money sits, the more it works for you. Your savings are like going to the gym. You only see results if you stay consistent and stop skipping sessions. But if you do want to save and spend, you might be better off getting a money market savings account, which is basically a hybrid of a checking and savings account, but they usually have higher balance minimums. I also know that unexpected expenses happen, like medical bills, cars breaking down, or a leak in the roof. If this happens to you and you only have the money in your savings, then yes, definitely withdraw. But if an emergency happens before you've saved anything, don't hesitate to get a quick online loan from CreditNinja, one of the highest rated emergency lenders with thousands of 5-star reviews on Trustpilot. Learn more about CreditNinja in this video. Moral of the story, you get the most out of a high-yield savings account by adding to your savings to take advantage of the high interest. Now that you know what not to do with high-yield savings accounts, here's what they're best for. Your emergency fund should cover 6 months of living expenses. So tally up your rent, food, bills, and your must-have expenses for the month, then multiply by 6, and that is a good target goal to have in your savings and for an emergency fund. If you watch this whole video and use the account correctly, it's risk-free growth where you can earn real interest on savings, unlike traditional savings accounts, which only offer around 0.4%, which is basically nothing. I mean, inflation is usually 3% per year, so every dollar you keep in a regular bank account is essentially losing money. Also, your money stays liquid, unlike CDs, which are locked up for a year or more. To work towards your savings goals, I like to set up automated deposits each paycheck, so I don't need to think about it, and I'm getting the most out of the high APY. When I was saving for my house, I put in $100 each paycheck, and this added up over time. By the way, I know saving and spending is very personal, and it's easy to feel behind. But at least you're watching this video now. And also, you may not actually be behind. If you're curious about where you stand on savings, debt, and income compared to your age group, watch this video linked in the description. The next thing I learned after opening my first HYSA is that I have to pay taxes on the interest earned. When you open an HYSA, know that when it's tax season, you will get a 1099 tax form from your bank on the interest that you earned because it counts as income. This isn't a bad thing because this means you're making money, but you will need to add it to your income for taxes. When you sign up for an account, you have to read the fine print. That 5% APY sounds great until you realize that it only applies to the first $5,000. And with some banks, you have to meet certain qualifications to get the best interest rate, and they can be wild. For example, with Fitness Bank, which offers a very generous 5% APY, you can only get 5% if you have a $5,000 average daily balance and 10,000 steps per day. If you walk a lot, this might be great. But if you don't maintain $5,000 or walk everywhere every day, your APY will drop significantly. Another important fine print to know is that some banks include things like minimum deposits to even open an account. For example, with Open Bank, which has a great 4.4% APY, you have to have a minimum of $500 to open an account. By the way, I will cover my top 6 favorite banks to open a high-yield savings account in at the end of the video. Now, other banks might put in the fine print that they only let you earn the interest up to a certain amount, like with Vario, that gives you 5% interest on balances up to $5,000 and 2% on any amount above $5K. So you may also see a hold time on deposits where your money may not earn interest or be available right away. For example, Discover's fine print says that funds deposited via ACH take 4 to 5 business days to become available. The next fine print item to watch out for is that they may have requirements like one of my favorites, SoFi, which requires you to set up direct deposit into a SoFi checking account to get the highest APY. The last fine print item I'll cover is a withdraw or transfer limit. With Amex, accounts may be closed or reclassified if there are excessive withdrawals. Like with Bread Savings, where more than 6 withdrawals in a statement may incur a $10 fee per transaction. By the way, if you've learned something new, please give this video a like to support our channel. And if you're actually serious about saving money, you might want to avoid buy now, pay later apps. We actually published a video covering buy now, pay later and how dangerous they can be. So if you don't want to accidentally ruin your financial future, watch those videos after this one. Now, the 6th thing you need to know about high yield savings accounts is that you don't need to be loyal to any bank. Instead, be strategic. What I mean is that you can open multiple accounts. I mentioned at the start of this video that I have a few high yield savings accounts. That's for several reasons. One, I opened my first HYSA 6 years ago when the interest rates were much lower, and they've been a lot higher in the past couple of years. So I took advantage and opened new accounts to get higher interest. Now, I have multiple HYSAs at different banks for different savings goals. One for my down payment, car payment, and one for my emergency fund. However, you do need to keep track of your banks and check every few months to see if the interest rate has changed. Before I get to the most important thing you need to know and share my personal favorite HYSAs, it's important to know what you should stop spending on. That's why our next 2 videos are on things I don't buy anymore and the hidden dangers of cash advance apps. So hit that subscribe button and turn on notifications because these videos could save you hundreds before your next payday. Okay, so there are so many options nowadays, and you have to check that the bank is FDIC insured. FDIC insurance protects your money, and most well-established banks like Ally, SoFi, Amex, Discover are direct members of FDIC because they directly hold your money. Now, banks like Chime are actually neobanks, which I'll cover in a future video, but they don't actually hold your money. Instead, your money actually sits in an account with partner banks. For Chime, that's the Bancorp Bank and Stride Bank. Don't worry, your money is still safe as long as their partner banks are FDIC insured. So when you're looking for options, look for member FDIC and the actual bank partner name. It'll likely say something like FDIC insured for up to $250,000 through XYZ Bank if it's not a direct member. Now that you know all about the fine print and things to watch out for, how do you choose an HYSA that's best for you? Well, the first thing you have to consider is how much you have to initially deposit. If you have a larger amount, you could qualify for higher APY. If you have $0 to put in initially, there are a lot of options too. Do you feel comfortable putting money into a bigger, more established bank, or are you okay with a small bank? The best savings account is one that protects your money, gives you peace of mind, and helps you actually save. Sometimes that's a big bank with likely better customer service, where you could reach a real human. Sometimes it's a scrappy online one with higher interest. Just make sure it fits your situation. My advice is to pick your top 3, and then I highly recommend reading up on their Trustpilot reviews and going to Reddit to see what customers are actually saying. My top picks are in no particular order, and I either have an account or seriously considered starting it. Starting with Axos, which offers a high APY of 4.66, but they do have a minimum balance of $1,500 to get to that rate. This is a good option if you have the cash. Next up is Varo, which has the highest APY at 5%, but like I mentioned earlier, it's only up to $5,000, and then after that, it's 2%. But if you're saving for $5K, this could be perfect. And anything over, you could put in another account. My next pick is SoFi. I do have a SoFi account, and now they're offering a promo where you can earn an extra $300 with direct deposit and up to 3.8% APY. There is no minimum, so this is a good starter account. And they have tons of features in the app where you can create sub-accounts for different savings goals. Ally Bank is also one of my top picks for a big bank. I've banked with Ally since 2015, and right now they have a great 3.6% APY with no monthly minimum. They also have a ton of cool features like SoFi with their spending buckets feature, and boosters like roundup savings and even surprise savings so you can hit your goals faster. Their customer service is incredible. Open Bank is also a great option with 4.4% APY, but there is a minimum of $500. My last pick is Bread Financial, which offers a great 4.3%, but they require a minimum of $100. I hope you feel ready to make your decision and start saving. Thanks for watching, and I'll see you in the next one.